Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
In the financial media, I've discovered that hope springs eternal. That
it's
folks,
a new year, new opportunity.
Exactly. A week or so ago, I read an article. I think it was either CNBC or Market Watch or somewhere like that. I don't read entire articles at Market Watch anymore because they're behind a paywall now. And I will not pay for that.
They want you to donate.
I will not pay for that drivel. I will not pay for it. I'll make fun of it, but I will not pay for it. Anyway, the article said there was some expert. I'm a Wall Street expert. A Wall Street expert says that 2022 will be a stock picker's market. Doesn't it seem like every year? This year, this is the one. This is the year where actively managed mutual funds and stock pickers, they are gonna get it. They're gonna nail it this time.
Because there's so much opportunity, right? I mean, there's undervalued companies that people haven't invested in because they haven't invested in them. So a year ago, they said the same thing.
No one knows. There's just hidden knowledge. What?
A year ago, a bunch of forecasts from this said this is going to be a stock picker's year. That was
for 2021.
Oh yeah,
what
absolutely.
A coincidence.
Yeah, and then it turned out. And by the way, this is why we think while hope does spring eternal for some things, it does not spring eternal for someone knowing the future, picking stocks, etc.
Okay, wait.
85%.
May I correct you for a second?
What did I say?
Hope will always spring eternal.
That's what I'm saying. It should.
But it may be misplaced hope.
Yes. Okay. Yeah.
So
we don't think it should
money,
apply to this.
Yeah.
Is what I'm saying.
Yeah. Exactly.
85%. A year ago, 64% of actively managed funds underperformed their benchmarks. In 2021, 85. This is, by the way, done with a couple of weeks left. So a couple of people may have had really great, last 2 weeks of December. 85%. Almost 90%. 9 out of 10 funds underperform the S&P's 500. Why would you own, and I know you do, because I look at your portfolios all the time. Mm-hmm. You say, we listen to your show. We love your show. Like, which part are you listening to? Because going back and listening to old podcasts, for almost 30 years now, we've been telling people just own index
or
mutual
index
funds
like
or similar.
Funds,
yeah. Right. That's it. That's all you have to do. You don't need to pay more to buy something that's going to perform not as well. And the beat goes on.
Tom, I am special. And therefore, because I am special, I know there must be special stock picking people who can pick for me because I'm special and I deserve someone special. That's the argument, isn't it? Really, that's what it boils down to. Is that of course that somebody's getting it right. I'm going to, because wait, even based on your numbers, 10% or so.
15, 10,
15%, somewhere in there.
You got to find those people.
I am going to pick those. What if I only pick those 10 or 15%?
Well, and you will be very happy to know they did well in 2021, but their track record might not be as good in 2022. Who's the most famous active manager right now? It's a woman. She runs a thing called the ARC Innovation Fund. Well, how'd she do in 2021 after 150% gain in 2020? ARK.
Innovation.
Apparently the ARK sunk. It did not hold water because.
Down 24%.
24%. So this is what happens when you buy the hot hand. Oh, by the way, she is predicting. She has predicted that fund will make 40% a year for the next 5 years.
Well, she's basing that on her last 5 years because when you average out her good and her bad, her last 5 years was 39% per year.
There you go. She's saying so she needs to find the next Tesla, which I know is a big driver for her. Oh, big driver? That's No pun intended.
Well, maybe it's Rivian. I hear good things about the Rivian.
Yeah. I was that close, as you know, to buying one myself.
Yeah. Well, I was just reading reviews of it. I went, yep, but it's $75,000.
But there aren't any on the road. There's not very many driving yet anyway.
Yeah.
I don't want to be, I'm not like you. I'm not the bleeding edge kind of guy. I'm years after the.
I'm bleeding edge, but not at $75,000. There's no way I'm bleeding that edge.
Okay. So index mutual funds.
Unless I get a raise.
Keep your costs low.
Oh, sorry.
Yeah. Nope. That's too late. We're into the new year. And please, the other part of all of this, just please be invested all the time. Don't, because it's still the number one call I get is I just came into X, or I came into X a year ago.
What should I do?
I got this money. What should I do?
Yeah.
That is still the number one question. And my number one answer is, what is the purpose of the money? How much risk you want to take? How much of this do you need? And how much you're trying to make?
And
that's
then
it.
once you answer those questions, you can build the right portfolio in which you should always be invested. 855-935-TALK.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
The good news is when you listen to Talking Real Money, you get special people talking to you, special people. We're all special together. You just don't know how special we are until you call 855-935-TALK, and then you'll realize how special you really are, because this year Tom has decided to be nicer to you as
I don't
callers.
think that's what I said exactly.
I think you said that.
I think I said my one goal is to be more positive.
He's going to be
about things.
Yeah, he's going to be less
positive
rough.
and nice. Yeah, okay, I'll think that through.
No, he's not going to do it. There's no chance. It's like New Year's resolution.
I made it almost 13 hours already. Come on.
You haven't talked to anybody until the last hour.
That's true.
It just sits around watching soccer. How can there be so much soccer on all the time?
I just love it. What a great week.
24/7. There is soccer.
My wife today said, why are you doing talk radio about money? You should be doing talk radio about soccer.
Yeah, that'll have an audience of about 12.
In this country, but in others it might.
Well, okay. Learn German. Or Spanish.
In Schilligan, bitte.
French.
Yeah, got it.
Hungarian. I don't care. Swahili. Learn a foreign language. Actually, Spanish. That's probably the biggest one, isn't it?
Oh,
after ours. Yeah.
Sure.
855-935-TALK is our phone number, but we also get a whole slew. I love the word slew. Slew of questions sent in at talkingrealmoney.com, the website.
Is that SLEW or SLOUGH?
Slew. SLEW. Okay. Yeah. That, I think SLOUGH is slough. Like to slough something off.
I thought it was isn't that like a slough, like where there's water or something?
Or it could be
I could be wrong.
You know, now, hold on.
It's not a slough.
I hate it when you do that, because I don't like having, I just hate having unanswered questions in my brain rattling around.
I'm telling you, I'm right about this one.
It's a slough. You're right. Yeah, it's a swamp.
Yeah, that's what I think I said. Yeah, water's moving through it slowly.
Yeah.
I got one about, 80 feet from where I stand at this moment.
Okay, it is.
Although it may be
pronounced
maybe rather frozen.
Slough.
Yeah, right.
Slough. Yeah. And then
we have a number of those here in the Puget Sound region, as you might expect.
And I guess, let's see, if sloughing is to go from side to side, or
and wasn't there a horse named Seattle Slew once?
Yeah, maybe because he slew from
stuck
side to
in
side.
The muck or something.
It's either it's a verb or it's a noun, and in the case of a noun, it's a whole bunch of something, like a slew of questions at talkingrealmoney.com.
All right, hit me with one.
Hello.
All right, silly aside. Yeah,
hello. Go. I listened to you, they're talking about, a few months ago on Stacking Benjamins.
That was you.
And enjoyed the discussion so much, I looked for subscribed and am still binging on Talking Real Money episodes.
Oh, thank you for that.
I am enjoying them and learning something new with each one. I have lots of questions. But my most pressing is, when do you recommend someone hire a CPA to help them tax plan? We have most of our assets at Fidelity and have been using the same tax preparer and enrolled agent for many years. We haven't found anyone at Fidelity who wants to help us draw up a yearly plan for reviewing income and managing Roth conversions each year. And our tax preparer has said repeatedly that's with whom and where we should make such plans. We're feeling stuck in the middle of service providers. What do you recommend? Love the show, Susan.
Yeah, I mean, most CPAs look back, not forward.
That is actually a really good answer.
Thank you.
That is a really good
it's a
answer.
new year, and I'm going to try to be better.
Because Fidelity does have advisory services.
Exactly. It would be more of a financial advisor.
Yeah,
but I mean, that would be something your financial advisor generally would say, here's where you are. Here's what you could afford to do. Could you do a Roth? Could you do a Roth conversion? Could you do a backdoor Roth? That would be more, again, with your financial advisor than with your CPA per se.
That makes sense because at Vestory, we work with people to plan forward. But we don't do tax preparation, which is the going backward and saying, oh, you earn this much, you need to pay this much. We don't do that. We have CPAs with whom we work.
Yeah.
Who will do that, but we don't do that. So that is the best. That really is. I'm giving you legitimate credit. There is no sarcasm. And I know you can't tell because I'm so sarcastic all the time. But in this case, there's no sarcasm. That is really a good answer. A CPA looks back. A financial planner, and I'd rather say registered investment advisor, 100% fiduciary. Because that financial planner doesn't mean a darn thing.
Everybody. Yeah. Right.
Your financial advice provider, who should be a 100% fiduciary, is the one who should be looking forward. And I'm surprised that they haven't offered you one at Fidelity.
Maybe they haven't. They've just decided they don't want to do that.
I have no idea.
And this is, by the way, this is another thing, because we mentioned this last hour, previous podcast, about the people that have financial advisors. This is not a pitch. This is just, there is a study that shows by Vanguard that having the right type of 100% fiduciary advisor, you end up making more money. There's another new study.
3% per year more.
A year. That's a lot. And there's another study that we mentioned today that shows that the people that have a financial advisor are happier about their money because they don't worry about it as much because things like this somebody's paying attention to this where you don't have to. I think that makes sense. Again, that's not intended to be a pitch, but it's a pitch. Truth.
It's a pitch for the 1% of the industry that is actually good at this.
Well, that's true.
And it's true, folks. It's just 1% of the industry that is always required to act in your best interest. So I hate to tell you, I know you don't like bad news, but the person with whom you work is probably not always a fiduciary. Today was one of the few times we had a caller or a question in the first hour or yesterday's podcast where a guy said, I work with Brighton Jones in Seattle, and we know they're 100% fiduciary firm, but they're in the minority.
And I just talked to somebody at the end of last week, a couple of days ago, that holds themselves out as an RIA. And then if you come in their office, they say, you might be a good candidate for this annuity. So they send you over somewhere else and they get some sort of kickback, they get something
money
for it. Ugh.
A commission, probably. No, it was a commission because they were sending you to the agents, to the insurance company itself.
Correct.
So the insurance company paid them as an agent a commission, which is not in your best interest. I don't care how they want to color this. Well, I believe selling an annuity is in their best interest, but do you get a commission? If you get a commission, there is a conflict of interest. So now the bar has been raised so high when you do that. You have to now, the onus is on the advisor to prove that it is a far superior product, far superior to anything else they could offer you that did not carry a commission. And the simplest way to use this argument, you have two S&P 500 funds, and this is actually a true story. There are S&P 500 funds that are sold through commission salespeople that have a 5% commission, and there are S&P 500 funds that don't have a commission. Which one is likely to make you more money? Which one is in your best interest? If they sell you the one with the commission, they can't be acting as a fiduciary. Cannot. 855-935-TALK is our number. Stay right there.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Why do we talk about real money? Because it's really blasted important. And so many people get it so horribly wrong because there's so much misleading information out there. It's just awful. It really is. It's the wild
self-serving
west of money. We have regulators, but they just don't regulate the right places. 855-93, like insurance. 855-935-TALK is our phone number. And Bernie is up. Hi, Bernie. Welcome to Talking Real Money.
Hi. Speakerphone. So I have a question. I'm trying to find Vestory or APFA on the National Association's Professional Financial Advisors, NAPFA.org.
Oh,
I can't find your name.
I don't think we're a member.
I don't think we're a member.
That's a professional organization, and you actually have to have a planner inside of your organization. NAPFA, yes, I'm aware of it. Yeah, and you actually, it's one of your advisors. No, we never did. I mean, it's one of the things. It's a place where you can go get advice from other planners. It's a little different business than what Vestory and Apella are in. That's more of a pure planning. In other words, if you called somebody up and said, I just want to write a financial plan, tell me about yourself, you'd find more planners there. We have planners and we do planning, but we also manage money for a living. So NAPFA, well, I think NAPFA does some very good things. They do some good education, and does some good things for its members. It's just something we just I think consciously, Don, we looked at this.
We did look
6-7 years ago and
many
decided,
years ago.
we're not going to do.
Well, and it's not cheap. And we didn't really see any advantage to joining NAPFA from the perspective of how we do business. But we probably could. We just haven't done it.
And the thing about that is, go ahead.
When I was looking at that list, I forget why I punched on it, but it opens up with their explanation of who they are. But they're supposed to be all 100% financial fiduciaries.
Well, I'm looking here at them. And I see some like Robbinswood. We know who runs Robbinswood.
Yes, we do.
And he's a 100% fiduciary. Yep. We know the guy. We know the people at Avier, and Allison Spielman. So I'm just looking at the Seattle area, and the ones I'm looking at, they are yes, everyone.
That is true. Here's one thing I will mention. It would not be just because you're a NAPFA member does not mean you're necessarily a good advisor per se.
Everybody
can join
screen.
it. You can join it. Yeah. There's no requirement of any kind.
Well, there is. You do have to, you have to show them your ADV Part 2.
Yeah. Okay.
You must be a fee only. If you're a Pathway member.
What about hourly? I bet they have hourly members.
I don't know, but there's fee onlys.
No commission then maybe.
Yeah, they're all fee only. You must be fee only. Okay. So there's no commissioned advisors, which eliminates a lot of the conflict of interest. A lot.
Yeah, that's good. But they probably have planners that write plans you can pay for.
Right. You must offer comprehensive planning services and submit a sample comprehensive financial plan for peer review. And I think at the time we looked to join, we did not have a full-time planner.
I'll bet you, by the way, inside of Apella, there is someone, one of the advisors that's a NAPFA member. Almost guarantee that because
let me look.
I've had people around for a long time that have been doing this. So, it's a fine organization again, but it wouldn't be necessarily the place I would go to find an advisor.
But it's a good start. Apella. I'm going to look them up and see if they're in there.
In the area.
Diana Bacon.
Is a lot shorter than this one, right?
Huh?
Because these are financial planners, and your list is not typically financial planners per se.
Not just, but just to let you know, Diana Bacon, who is part of our firm,
one of our advisors.
She's one of our advisors in Texas. Yeah. She's a member of NAPFA. Chris Brown. who's in Knoxville, Tennessee, is a member of NAPFA. Jamie Ruff, who's in Alpharetta, is a
Alpharetta?
Alpharetta. That's what it says. Alpharetta.
I don't even know what is that. That's a new one to me.
No, Alpharetta's outside of Atlanta.
Okay.
Yeah.
Yeah. So we do have members.
We have people
of our organization.
It's also individual human beings, by the way.
Yeah.
Exactly. More than firms. So. But yeah, no, it's a good place to start. Thanks for the call. We appreciate it. We like NAPFA. 855-935-TALK is our number. 855-935-8255. Give us a call. We'll try and make money make a little more sense for you.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
In the Como 4 Weather Center, I'm meteorologist Shannon O'Donnell.
Mostly cloudy skies, 33 in Seattle.
Reality radio for a really great future. We're talking real money.
Hi. Welcome back to our little show. I'm Don. Tom's over there. We're here for you on New Year's Day. We like doing the show so much we did it New Year's Day. We couldn't come in. They wouldn't let us come in on Christmas. They told us we had to stay home on Christmas. But otherwise, we're here. They did. They didn't run any shows, right?
No, they ran your Christmas tales
Christmas
or
stories. Short stories from litreading.com, my other podcast service.
Oh, yeah.
I'm plugging.
Sign up today, please. That's reading.com.
I even put in my thing on Saturday. I said it's lit reading, Tom, not lip reading. I actually said Tom.
Okay.
Tom, I did.
I'm going to milk that bad joke as far as it can go.
Really? You milking a bad joke? That's
a
never
surprise,
happens.
I know.
All right. 855-935-TALK is our number. Give us a call. We've got a couple lines open for you right now. And Chris, you are up next. Welcome to the show.
Well, thank you, gentlemen, and Happy New Year to you. I appreciate you working today.
Well, our pleasure. We're glad to be here.
Yeah, I like listening to your show, and I look forward to it every week, and I usually learn something, and that's why I keep listening. So thank you very much for that. Question I have is, with the new year and the Fed's talking about increasing interest rates, I think like 3 different times, how is that going to affect the bonds? Does that make any sense?
This is a really interesting question, because I just read an article about this, because the markets, the bond markets, are not influenced by what the Federal Reserve does. Not at all.
They are independently traded. And by the way, they're more actively traded than the stock market in many ways.
And the fact is,
by the way, go ahead.
But the fact is that rates have actually, since the Fed has announced that they are going to raise overnight short-term rates, rates on bonds have actually snuck down a little bit.
Yeah. And I just ran the numbers this morning because I thought this might come up. 2019, intermediate term bond fund made 0.5%. 2020 made 0.25%, and last year, 2021, lost 1.4%. So we have not made a lot of money in bonds.
But we're not supposed to make money in bonds.
No, and by the way, we have no idea, nor does anyone else, what will happen to the bond market in 2022. I do know this about bonds. I just mentioned some numbers. They're pretty small compared to what the stock market has done. Bonds should be there to tamp down the volatility in your portfolio. They've done a good job with that, the right type of bonds, right? Intermediate term, mostly government, shorter term. That has done a very good job. That's why I think, Chris, you should own bonds. I have no idea about your situation. Anything else is purely speculative. Anything else about, what's going to happen tomorrow when the Fed raises rates? What's that going to mean to the value of a bond portfolio? By the way, there's bond portfolios going to be buying new ones at higher rates. So there's going to be all kinds of mixing going on there that may affect the actual price of that bond fund.
And you need to remember this. Markets don't react to expected news. They anticipate and react prior to the events occurring. So any interest rate hikes that come about in 2022, as long as they're small and within expectations, should have no impact on the bond market. They should have already had an impact on it because markets anticipate, don't react unless the event is outside of the expectation. Make sense?
Yes. Thank you very much. I appreciate that.
You're very welcome.
Thank you. And by the way, speaking of bonds, I mean, this is a fascinating thing. A guy called the Bond King once.
Well, Bill Gross. Yeah.
Bill Gross. And a guy named Jeffrey Gundlach, who was sort of his successor.
Mm-hmm.
Look at their track record since they were sort of anointed as the people that know about the bond market. It has not been very good. Sometimes people get into a place where they, like stock pickers, where they do well for a while and then over time. I mean, I can remember Bill Gross and Jeffrey Gundlach sort of arguing with the Federal Reserve. You can't do that. That's wrong. You're not doing the right thing. Well, they don't care what Jeffrey Gundlach says, and they don't pay attention to what Bill Gross says. They make their moves based on, whether they feel like inflation's under control, et cetera. So I would not be trying to anticipate, because the people that try to anticipate do a poor job of that. Very poor job over the long haul.
When they do a good job, we can show you evidence that might lead you to believe that their outperformance was more likely due to luck than to skill. Remember, people do win sometimes, like lotteries, stuff like that.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I don't even want anybody to call. Just don't want you to call, because there are times when a question just comes up in rotation from TalkingRealMoney.com that I'm if I had a bit, I'd be literally chomping at it.
This is really question. A doozy, I can tell right now. Yeah, go ahead.
I am going to rearrange the question slightly. I will not change the language. I want to rearrange it for dramatic effect. I've rewritten it slightly. I've done a rewrite.
Okay.
All right.
Hit it.
Hi, Tom and Don. Love your podcast. One of my favorites to listen to on my daily walks. Wish I had found you way back when, so I could have avoided all of the painful financial life lessons. I've learned the hard way. Have you? Okay. Wanted to ask you a question. Tom, here's the question. Ready? Suppose a couple came to you looking for financial advice. Let's say this couple had an annual income of $40,000 a year, and their total debt was $290,000. What advice would you give the couple regarding their plan to take on an additional $20,000 in debt to help them keep up with their payments on their current debt? I think we both know none of us would support that solution. There's some missing information there.
Ouch.
How much is this couple worth? Do they have $1 billion in assets, or $1 million? Yeah. $10 million? How much are they worth?
Is this a mortgage? Is this credit card debt?
What's it debt
loan?
Against? Yeah. Here, we continue. So here's his point. This was a gotcha question. This is a gotcha question. Because if we multiply each of those figures by 100 million, we arrive at the U.S. national debt, 29 trillion, revenue, 4 trillion, and expected debt limit increase, 2 to 2.5 trillion. And so he goes on to say, I'm going back to the first paragraph that I left out. I am aligned with you 100% in my personal finances. He's not. He said 100, because then he says, but still struggle with your stance on Bitcoin. You often state that Bitcoin is a proposed solution looking for a problem. Bitcoin was created as a result of the 2008 financial collapse. The government debt
before then, but okay.
The government debt, he's saying, is a problem. I, like many others, are looking for an alternative to what looks very much like a sinking ship. For folks like me that are looking for a plan B, if not Bitcoin, what suggestions would you offer?
Okay, so let me make sure. I think I can frame this question now. The question is, should the U.S. government somehow renege on its debts? The currency of the United States goes way down. Should I own something else that still maintains its value?
You got it. You got the gist of it. But there's a lot more political meat in here than I really want to get into. There's a lot of political
people to listen to this. We're not going to go there. So,
but what is your solution? Should the U.S. government default on its debt, everything goes to hell in a handbasket? What would you do?
I don't know.
I do. I have the perfect solution.
Okay, go.
Because
it wouldn't be Bitcoin, by the way.
No, it wouldn't. It would not be Bitcoin. Because bear in mind, we are by far, by incredible margins, the largest economy on the planet. We really are. In terms of market capitalization, we're the most trusted economy.
And the securities issued by the U.S. government, there is no comparison to anything else in terms of whether or not foreign investors believe they'll get their money back. There's no comparison.
If I'm going to say if your conclusions are correct, and I would argue your conclusions are not necessarily correct. I mean, the U.S., I just looked it up.
I don't know about the debt being that high.
Well, it is that high. The U.S. has, though, one thing that our hypothetical couple does not have. The U.S. government owns property. Huge amounts of property.
Yeah.
Just the oil and gas underneath U.S. owned property is estimated to be worth $128 trillion.
That's just the land.
Under the land. Right.
Yeah,
the land itself is
mineral
worth
rights,
about $20 to $30 trillion. Just the land.
So they could start selling that off. But I
Plus,
don't
wait a
know.
minute. Yeah. Can our hypothetical couple tax all of the other hypothetical couples in the world to help pay their debt? No, but the U.S. government can.
Government can, sure, of course.
But here's the alternative. If the U.S. government fails, the whole world is going down with us.
Yeah, I don't see any, again, I don't think Bitcoin would be the life raft there that would make sure you're okay.
No, there is.
And I don't know of another currency that wouldn't sink because they'd be like, this is the end of the world economy. They'd go down with them.
Gold will collapse in that scenario because gold is not edible.
Okay, so then you are left truly with the three most important things. Guns, canned food, and ammo.
Yeah.
That's it.
That's it.
So if I were you and you want the alternative, clean out the basement, put up the shelves, stock up.
Because nobody's going to want your bloody Bitcoin. There's nothing backing.
There won't be an exchange anymore.
At least the U.S. dollar has hard assets and government taxing authority. You can be arrested for not paying your taxes and go to jail. Bitcoin does not have the ability to tax to support its currency.
Didn't we have another question like that where the guy said, I could pass these assets on and not pay any tax on them?
No, that's a future question coming up.
Okay, all right. It's like, you could cheat on your taxes. Go right ahead. But
so that's why we don't recommend Bitcoin. We're and I'm telling you, we're never going to. I can tell you with confidence, over 30 years of talking to people about money and all the latest little doohickeys that came up along the way, that I'm never, ever, ever going to fall in behind this. The only people are only excited about Bitcoin because they own some. And they want to make sure. They want to make sure it keeps going up.
Their business could profit by adding that in some way. Because I see a certain well-known tech president has decided to back it now, too.
Which shocks me. I thought he was smarter than that.
My biggest worry actually about Bitcoin is when that does come to an end, what that's going to mean in terms of confidence in the rest. I think that's a real problem.
Right.
When that goes,
to me, that's a much bigger
than the other way around.
It's a much bigger blade hanging over the economy. It's like
I agree.
There's a crypto guillotine that is
going to. You thought the real estate collapse was bad.
It was bad. But crypto's into the trillions of
yes, it is.
Of made up dollars now.
I know. And people think that's how much they have, but when they find out they don't, that's going to be bad.
Why is Bitcoin of value? Then aren't the other 15,000 cryptocurrencies? How do you determine which of these made up currencies is the good one? They're all made up. Every one of them is made up. They have no underlying value except what the greater fool will pay for them.
That's exactly the right thing. The next person that believes something's worth it. That's it. There is no other value. They don't pay dividends, etc.
And here's the thing. I read about crypto far more than I ever imagined I would or probably even should. And not one article that I've read explains why Bitcoin should have value. The argument is always, well, you don't get the blockchain. No, I get the blockchain. I could never create my own blockchain because I'm not that computer savvy, but I get what it is. I understand that. I just don't understand why one or two of the blockchain currencies are the ones that are somehow worthwhile.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Okay, assuming Omicron runs its little course and gets done soon, we're going to have a great event coming up in February. It's called Retire Meet. And this is
a great event.
It is a great event.
No question. Yeah.
Plus, it's like the best sandwiches. You could even take it home, store it in your basement for Armageddon.
Have it ready with the canned peas. You're ready to go. Yeah.
No, this is a great event. We got some good people showing up in 10 seconds. Who's going to be there? 10 seconds.
Rick Gregorick, Tom Cock, Don McDonald. Who am I leaving out? Herb Weisbaum.
Paul Lopescu.
I always try
Paul
to
Merriman, maybe, by video.
That's right. No, he's there.
He's there. He's there. Get the tickets now. RetireMeet.com. Hurry.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Appellate Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?